Now, we have quite a few interesting topics to explore tonight. First of all, the ringgit. It has surged against the US dollar, made quite a huge comeback all the way to 4.53 from, I think, 2 or 3 days ago, it was like 4.65 like that. Yeah, representing a rally of 3 to 4% in just the span of 2 days. Meanwhile, against other currencies, other major currencies such as the sterling pound, as well as the Singapore dollar, the ringgit has also rallied quite a big amount. Okay, we'll talk about the reasons as to why we are seeing this sudden rally, because we've only talked about the ringgit's weakness for the entire year. Yeah, then next up, we'll move on over to global markets rebounding as US inflation data moderates. And lastly, we will explore, or perhaps we'll give a breakdown on MIDF's most recent weekly fund flow report. It still shows that, foreigners, they have been one of the largest net sellers in the Malaysian market, and the question arises as to whether this selling trend will persist or not. Yeah, this and more in our weekly analysis as usual, not financial or legal advice. And a quick shout out to all our current learners and gatherers, our patrons. Thank you all so much for your support. It's been almost 2 years since I started this Patreon membership, so really thank you guys for sticking with us through thick and thin. Allow me to start with Andrew, Wendy, Edward, Alex, CC Is, Morpheus, Urshad, Caveman Balls, Kelvin, Kai, Thian, Tommy, Jinkang, Adrian, Eric, JS, Wenyan, Dean, Duhan, Ken, and Faris, as well as all our learner members as well. Now let's dive right into the main topic of tonight. The ringgit has made a daring comeback. This is the USD MYR chart over here, the daily chart. You can see the dollar has slumped by over 3% against the Malaysian ringgit. Now this movement is the largest single day movement for 2 consecutive days since November. Yeah, and it's pretty shocking. Yeah, all investors, everyone, even look retailers, right? Retailers, they're wondering what on earth is going on. And immediately they kind of related it to Tesla coming over to Malaysia, because just nice on Thursday to Friday, PM Anwar held a virtual meeting with the EV CEO Elon Musk. Okay, and they've agreed that Tesla will set up their headquarters in Selangor this year, and so people were like concluding that, hey, this is the main reason for the ringgit's rally. This is why the ringgit has made a gigantic comeback. The reason why we've seen a 3% or even 4% rally on the local note and against other currencies as well. But funnily enough, this is not the main reason for this rally. We take a look at the US dollar index, which is basically the greenback versus other major currencies such as the euro, yen, and yuan. In the same period, the dollar index has fallen by pretty much the same amount as well. Okay, if you take a look at the USD MYR pair, which is pretty much one-to-one until recently, we've kind of veered off a bit. But this becomes quite clear that the recent strength in the ringgit that we are seeing is due to the weakness of the US dollar. And for the moment, you take a look at the dollar index, right? It has fallen below its crucial support of 100 points. And if you're a trader, you kind of know what I'm talking about. It's just like a resistance and support thing. If we fall below the crucial support, then we are going to anticipate more weakness to come. And you take a look at the trend for the dollar index the previous few days, it has been extremely weak, breaking below all the crucial supports. 102 points, 101 points, and now finally this extremely important support of 100 points over here lah. So we do kind of expect this weakness to temporarily continue on a technical basis. So now let's take a look at the reason as to why we are seeing the US dollars decline over here. Well, that's because US inflation has cooled significantly. And now this is June's figure released in July, boosting chances for the Federal Reserve to end interest rate hikes after its meeting this month. So overall inflation decelerated to 3.0% year over year, the lowest level since March 2021, slightly lower than expectations at 3.1%. Now, if you followed our sessions for quite a few months, right, we always analyze CPI data from the US one. And in this case, it's just an if and then case, right? So if the CPI data comes in lower or hits expectations, then that's going to be bearish for the dollar and at the same time bullish for markets, especially equity markets. Okay. So in this case, not only the overall inflation came in below expectations, which is an extremely good thing, core inflation also cooled to 4.8%, below forecast of 5.0%. And if you compare it to the previous month's figure, which is May's figure, the overall inflation was at 4%. So the most recent figure, overall inflation dropped by an entire percentage point. So that's a lot of positive news right there. And consumer inflation is being pulled down by big declines in gas prices. Despite this, Fed officials, they have not declared victory just yet. Policymakers are still trying to assess whether the moderation is steady. So basically, the Fed wants to kill inflation at its roots. They don't want it to be quote unquote entrenched in the economy. So given the elevated core inflation, because you must understand, central banks all around the world, they tend to have a target goal of 2% when it comes to inflation. Okay, and you take a look at core inflation right now in the US, it's still over 2 times higher. Yeah, overall inflation is pretty close to the central bank's target goal already. But given this elevated core inflation figure, a final 25 basis point hike in July 23 has been largely priced into the markets. So take a look at this chart, target rate probabilities from CME Group over here. The upcoming meeting from the Federal Reserve on 26th of July, 93% of investors, they already factored in perhaps a final 25 basis point rate hike from the Federal Reserve. And then they are expected to hold it at this level for the rest of the year. Okay, so I even asked my advisor, Mr. Sunny is an economist. He expects 1 to 2 more rate hikes from the Federal Reserve this year and then hold it at the current level for the entire year onwards. So this is obviously kind of good news for the markets because inflation is steadily moderating. The Fed's action is somewhat working. That's why when you see the CPI data came out immediately, global markets rallied. S&P 500, the most notable index over here, rallied by 2 to 3%. Meanwhile, the FBM KLCI, which is our local Bursa market, previously was kind of 1 to 1 to the S&P 500 until we decided to break off and perform much more worse. But this rebound over here is kind of refreshing to see as well. IBM KLCI within the same period after the US CPI data was released rallied by 2 to 3% as well. And this is not just happening to our markets. Other markets such as the Japan market, etc., have also seen similar rallies. Okay, they are all tagging along the US stock market's temporary rally. Even Bitcoin has rallied. Yeah, the crypto market itself has shown significant strength ever since the US CPI release. This just goes to show how big the US economy really affects the world. Okay, you can see over here from $30,000 rallied 4 to 5% all the way up to $32,000, trying to break this resistance, rallied up to 31,008 before retracing back down to the current level of about $30,000. So what about other currencies like the pound sterling? Yeah, we talked quite extensively about the ringgit versus the US dollar already. Now let's shift on over to some other currencies such as the British pound. Yeah, on a year-to-date basis, not exactly year-to-date basis, from its low since February, right? The pound sterling has rallied by an impressive 18.25%. And due to the dollar's backdrop, you're kind of seeing a refreshing retracement in terms of the pound sterling versus the Malaysian ringgit. Okay, so the Malaysian ringgit has strengthened somewhat from its previous 7-year high against the 7-year low against the pound sterling at 6.049 or 8, somewhere along those lines. Okay, and for now, the question arises as to whether this rally or this retracement will continue or not in terms of the ringgit. And as for the pound, right, I think this is just purely temporary. Okay, the ringgit strength against the pound is purely temporary because you take a look at United Kingdom's inflation rate, it's still at 8.7%. Most recent figure came out in June, was May's figure. Inflation was stagnant at 8.7%. And the central bank said that, hey, if inflation, as long as inflation is above our target goal of 2%, we will continuously remain aggressive, raise interest rates, etc., etc. Meanwhile, the government has also decided to adopt a similar stance. Prime Minister Rishi Sunak says UK inflation battle takes priority over tax cuts. So the message is pretty clear here from the United Kingdom. The Central Bank of England is going to continuously raise interest rates. Meanwhile, at Malaysia, at most, we are probably going to raise the OPR by another 25 basis points to 3.25% and hold it there for the rest of the year already. So it's pretty clear as to where the strength or the demand towards both currencies will go to. And obviously that's towards the sterling pound. I do anticipate the pound sterling to continue to retrace a bit, maybe all the way to 5.9 or even 5.85 But since UK's inflation is still pretty high, we do expect the pound sterling to strengthen back up against the Malaysian ringgit, at least. So next currency, the Singapore dollar. Yeah, a lot of people have been talking about the Sing dollar as well because it's pretty close to us, and it's one of Malaysian's most important comparison over here. Okay, ever since its low in February, rallied by over 9%. So not as bad as the pound sterling, but still quite bad. And you take a look, I think last week itself, the Singapore dollar has posted all-time high of about 3.5 against the Malaysian ringgit, and due to the dollar's recent backdrop as well, yeah, it has fallen, I think 2 to 3% all the way to the current level of 3.4252. Same question, whether the Sing dollar will continue its rally or not. Now, it's important to note that Singapore does not have a monetary policy based on interest rates, unlike traditional countries like Malaysia, US, and perhaps China, all these major countries, right? They control their domestic borrowing rates via interest rates, right? So Singapore Central Bank manages the exchange rate, meaning that they directly intervene in the currency market. And why are they able to do so? Well, that's because they are a small and open economy. They heavily rely on imports and exports. I think there was a figure like Singapore's imports make up 300% of the country's GDP or somewhere along those lines. So Singapore is highly dependent on trade, and therefore it's very sensitive in terms of import prices. And the most efficient way for Singapore to control inflation is the strength of its currency. So, in order to reduce local inflation, the Monetary Authority Singapore, which is the Central Bank of Singapore, they literally buy up Sing dollars to strengthen the local currency. And since Singapore relies heavily on imports, inflation cools with a stronger Sing dollar because a stronger currency tends to make your imports cheaper. Okay, so now the thing is whether Singapore's inflation has been high or not. And last I checked, it's still pretty high, 3 to 4%, if I'm not mistaken. And therefore, the Monetary Authority of Singapore is expected to continue strengthening its local currency. So I do believe that the retracement that we're currently seeing over here is temporary. It's just tagging onto the dollar's backdrop, but we do expect this ringgit's weakness to continue. Okay. So on to another topic for tonight. MIDF's fund flow report shows foreign net selling. They've continued their net selling streak in the Bursa market for 12 consecutive weeks already. 21 out of 27 weeks this year have been net foreign outflows from them, with a total outflow of 4.45 billion ringgit. Yeah, net foreign outflows reaching 254.1 million on the week of 10th July. You can see this chart over here. Yeah, pretty much the entirety of 2023, right? Foreigners have been dumping Malaysian equities. Okay, so local retail, local institution, we've been trying to save our stock market over here. Previous 5 weeks, local retail have been consistently buying up stocks. Meanwhile, local institution, also similar movement as well. But foreigners have been very heavy in their net selling pressure. So you can see over here, net when you add up all the selling pressure and buying pressure together, it's no wonder the Malaysian market this entire year has seen quite a lackluster performance. In fact, our Malaysian Bursa market is the second worst performing market, just behind Thailand, if I'm not mistaken. Okay, but now the question is whether this Malaysian market will see a comeback or not. Following the recent US CPI release, which is pretty bullish for the global markets, and you can see just now I show you a chart of the FBM KLCI, we rebounded about 2 to 3%. Similarly, all the notable stocks such as Public Bank, Maybank, Tenaga have also seen quite strong rebounds at 1 to 2%. So next week, we'll take a look at MIDF's fund flow report again. I do anticipate quite a lot of buying pressure. Maybe foreigners will re-enter into our Malaysian market because the Malaysian market has been pretty oversold for the entire year already. And you talk about our currency, the Malaysian ringgit, for the entire year, we've been quite oversold also, which explains a bit as to why we are suddenly seeing this very strong rebound. Okay. So just a quick bonus over here. I'm sure most, if not all of you are aware already. This Cash App Bursa is currently offering 4.3% per annum. It is the highest return rate of all the Cash Apps so far in the market. Yeah, so stash away, KDI safe, the next highest one comes in at 4.1% only, and it's projected. Yeah, that's stash away. But in the case of Versa, the 4.3% is net returns, meaning you are guaranteed to get these returns, and it is after fees also. Okay, so minimal deposit requirements, just the standard cash app things are Sharia compliant, same day cash up, which is what a lot of cash apps don't have. Okay, if you apply before 10 a.m. Now, this applies to Versa Cash I only. And the most important thing to know about this Cash App is that your funds go into a low risk money market fund managed by AHAM Capital Asset Management. Okay, and let's say the 4.3% per annum is only effective for the first 30,000 ringgit. So every dollar or every ringgit after that, you will earn the base returns, which is about, I think, 3.9 or 3.8%. Still pretty high. But bear in mind, Versa has two products offering 4.3% per annum. And that's Versa Cash and Versa Cash I. So Versa Cash is not Sharia compliant. Versa Cash I is the Sharia compliant one. If you're not too um, consider con considerable about Sharia compliancy, then essentially if you have 60,000 ringgit, right, you can split them into both products and effectively earn 4.3% per annum. So that's basically a hack right there. Okay. So if you're interested to register, just throwing out my referral code over here is the Futurist. And if you make your first deposit of 100 ringgit and above, you get the 10 ringgit in referral rewards. Okay. Yeah, so that kind of brings me to the end of my session tonight. Hopefully, you guys enjoyed the session and learned something. So yeah, we do have a question right now from Balls. Prudent to DCA into USDT right now to counter potential devaluation of the Malaysian ringgit. Sinji, if you have time, you may overlay the graph in trading view for BTC MYR in Luno against BTC USDT in Binance. There's a weird pattern in the graph on 14th July after the Ripple won the case against the SEC. Okay, so let's talk about your first question first, boss. Is it prudent to DCA into USDT or not? Well, now this is a very big dilemma over here. If you take a look at USD MYR, okay. So let me just take a step back and talk about my preferred way to gain exposure to the US dollar, and that's through stable coins like USDT. Okay, because I don't have a foreign account, and to directly hold US dollars, you need either a large capital or be like a premier customer in HSBC or all those other big banks. So the simpler way to gain exposure to the US dollar is to buy stable coins like USDT, USDC, etc., etc. Obviously, buying stable coins has much more risk compared to buying the original currency. So make sure you do your own research, guys. But with that being said, let's take a look at the trajectory of the US dollar. The ringgit itself has been extremely oversold for pretty much the entire year already, which is kind of why we are seeing such a very big rebound right now. And you have to take a look at the broader market. What's going on in the US right now? Well, inflation has steadily cooled already, right? And is forecasted to continue in this downtrend as well. And you take a look at the rate hikes from the Federal Reserve, because rate hikes is easily one of the signals that can tell you whether the dollar will continue to strengthen or not. Because I'll give you two examples. Just imagine Bank A and Bank B. Bank A is currently giving you 5 to 5.25% on your fixed deposits. Meanwhile, Bank B is giving you 3%. Where would you put your money into? Obviously, Bank A, right? And if Bank A is forecasted to increase their yield by another 25 basis points, would you not be even more motivated to move your money there? Yeah, so the future prediction as to whether the Federal Reserve will raise interest rates or not is very crucial for the US dollar's strength. And right now, we are only seeing possibly one more rate hike from the Federal Reserve, and inflation is pretty much expected to continue on its downtrend already. Okay, so therefore, the dollar itself should not see any very high movement upwards unless suddenly, oh, US inflation the next month spike up from 3% to 3.5%. That means inflation isn't dead yet. That means the Federal Reserve has to be more aggressive in terms of their rate hikes. That means more demand towards the US dollar. Okay, so this is just really an if and then case thing. But generally, economists, they expect inflation to continue to moderate. And meanwhile, in terms of rate hikes, just at the most one more 25 basis point rate hike or maximum two more 25 basis point rate hike from the Federal Reserve, and they're expected to hold it there for the rest of the year already. And this prediction, right, has already been priced in by the markets already. So to like go all in into the US dollar right now, hoping that the US dollar will go to 5.0, not to say that it's not possible, but it seems a bit unlikely. I know it's too early for me to say, but looking at the current trend so far, the dollar does seem to stay where it is right now. Okay. As for other currencies, like we talked about the pound sterling as well as the Singapore dollar, right? I do think the pound sterling still has some upside to go. Well, because inflation in the UK is still pretty high, over 4 times higher than the central bank's target goal of 2%. Okay, so make sure you weigh your decisions properly. Like, hopefully, I didn't confuse you guys or make you guys more uh, confused. Okay. All right, guys. Good night. See you guys in the next one. Bye.